What is going on today, YouTube? Today I'm going to talk about the stock market today, and this is going to be December 17th, 2018 that I'm talking about it. I'm going to talk about what I'm seeing today in different case scenarios for whichever time you are in your investing career, and give you even a little insight of what I have done in the past, and I actually have a screenshot to show you. So the main part I want to get across this video is why I decided to sell all my long-term investments. And no, I'm not trying to time the market. I just took the data I had at hand, how long I've been in, and what other things I could have done with that money. And I will explain that more as we go on. So the stock market today, if you don't know, on December 17, 2018, we're going to go S&P X, just regular S&P 500, and we're going to go to a 6-month day chart. Over all of last week, this is on Monday, December 17th, 2018. But last week, it fell the last 4 days of the week. And on Monday of the new week, it also fell big. It fell about 2% today. So I have said before on this channel, I like Vanguard index funds a lot. It's a low-cost index fund that replicates the S&P. So we're going to go look at Vanguard. Its chart is going to look very, very similar to this one. As you can see, I switched over to Vanguard, and it almost looks completely the same. 1, 2, 3, last 4 days of last week, and also today, Monday, the 17th, fell. So I have a long-term account where I hold the majority of my shares. Instead of keeping it in my bank account, a lot of the time with extra, besides what I'm putting in IRAs, I put just into a regular account that I can have access to at any time. I started doing this back in 2015. So I probably started about right around in here. I had a lot less money to put in back then, so over time I have been putting in more and more and more and more. And the whole way through until, we're going to zoom in a little bit, back to 6 month a day, I decided to sell on October 25th, after the market went back down to like around 138. And to have the actual numbers, you can see right here, I sold 1025, 18, 138, 138, and also VEU, which is an international, excluding the US, Vanguard fund. So I was diversified, for one. Instead of investing all in US, I invest some in international too, but filled, sell, filled, sell, filled, sell. So I sold all my shares that I have, besides leaving in a bank account, I have in this easy, accessible fund. And the entire reason why I did that, there's a lot of uncertainty right now. And since I am so new into investing, I mean, this is only going on my 3rd year doing it, I still had student loan debt. So I decided instead of just wasting money on my student loan debt, I would take this money out and pay off some of that student loan debt. To me, it made more sense than watching my money go down. Paying off my student loan debt gives me a guaranteed return on my money. And what I mean by that, say I'm paying anywhere from 4 to 8% in student loan interest. When you pay off that interest, that debt, you technically make 4%, up to 8%, whatever that current interest rate is on that loan. So to me, in my current situation, that account, it was not a retirement account. It was not a Roth IRA account. It was not a traditional IRA account. It was just, as I guess you could say, I'm a little more risk adverse with my money. And instead of just keeping it in a bank account, gaining minimal, if any, interest, I put it in the market. That way I can access this if I really need it. And I decided to. I decided to take it out on 1025 because I said, hey, instead of watching this money go down, why don't I just put it on my student loans and have a guaranteed return? So in fact, if I pay off those loans, I automatically make anywhere from 4 to 8% interest back, whatever rate those loans were on. Some of them were, I would say 4 to 8 in that range because the loans I had ranged anywhere from 4 to 8%. So that is a case in point on why I sold all my shares. If you look at the market today, I mean, regardless, I wasn't going to feel like I was going to make a bad decision. I mean, if you look, 1025 is right here. You can see it at the bottom here. 1025. So, yeah, it fell down and fell down even further to 1029. So, yeah, right there, I was thinking, I made the right decision. But it went back up. It went back up to 143, then it went back down, then it went back up. Now it's all the way back down to 129. So right now, did I make the right decision? Yes, because I don't know how far down the market's going, and these are my thoughts. This is just what I thought. I'm going to show you my thought process. I do not know how far the market is going to go down right now. So if I can get a guaranteed return of that anywhere in the range of 4 to 8% from paying off loans, why wouldn't I do that? That was my thought process. Yes, I know you can make the argument, well, if you just left your money in and you don't plan on touching it for the next 40 years, you're going to make far more than you would have if you just paid off those loans. Yes, I understand that. I know that. I actually explain that a lot throughout my videos and things like that, but I just couldn't understand if I had a potential to pay off my loans and have less monthly payment every month. Why wouldn't I do that? Get the burden off me of having that student loan debt, just completely eliminate it. To me, that far more outweighed the potential gains I could have had into the future. So that was a little bit of just letting you guys know what I did and my thought process behind it. Now it's a different scenario. Say if this was in a Roth IRA or an IRA. I think the majority of these stipulations why you can't withdraw them is because it takes the panic aspect out of it. So you can't panic and just decide, hey, I'm gonna sell everything I have, I'm gonna sell my retirement accounts, I'm gonna sell everything. I think that is why they actually lock it into that. And if you have long-term accounts, you really shouldn't be. And this was just because I started investing, and the majority of my investing was when my price range was up probably above 140. But yes, it was averaged in with the lower shares that I bought back in 2015. But as I'm getting more and more into my career, I'm obviously having raises, and I'm figuring out how I can put more money. I'm trying to budget better so I have more money to invest. And I've successfully done that over the last 3 years. So I have had the majority of my money was invested up here. So I think I actually took out, and because VEU went so far down from where I bought it, I think I bought this around $60 a share, that I think I actually lost around $300-400 in that process. But I just wanted to, I figured, to me, it made sense at this time to just eliminate my student loans as fast as possible. I want to point that out, and I want to get that right. So depending on your situation, depending if you've been in here for the last 10 years, I think you just got to look at the past and just say to yourself, okay, I'm not even going to look at it, I'm not even going to pay attention. Just going to go up over time, and I'm going to take it out after 40 years. But since I was so new into investing, and this was just my money I kind of put aside, like it could be technically my emergency fund, it could be just money I need to get. And since it wasn't in retirement accounts, I want to stress that it was not in any retirement accounts, and that's not how I use it. It was extra money I put aside from my bank account and I put into these funds. And also right now, if you turn on CNN for about 15 minutes, you have everyone out there having their own opinion. People saying this is the start of the bear market, this is just a little hiccup and we're going to recover very, very shortly, and we're going to have a nothing but green days until 2019. So you can't listen to these guys on CNN, guys, girls, whoever's talking on CNN. They have no idea. If they had any idea and they could actually tell the future and time this stuff, they wouldn't be talking on CNN. Just make sure you get that straight. They're just like me and you. They have no idea. They look at charts like this and they try to predict what's going to happen. So depending on your investing, where you're at, what you're doing, you can't worry about these little falls. You guys have a plan and stick to your plan. And my plan was I put aside this money because I'd rather it be in here than a bank account. That's honestly really risky. I mean, I could be putting this in and the stock market could fall 20% in a day. And guess what? I really lose out. I lose out on a lot. But that's the risk I'm willing to take because I feel like over time I can get more gains on my money than losses. And yes, if I have any gains on that, I do have to pay taxes on it because I took it all out as a lump sum. Don't forget about that either. So that's it for the video. In the next couple days, maybe the end of this week, next week, I am going to make another video of what my plan is and what I am planning to do in the future. I have a little announcement for myself to try to encourage all you guys. And if you keep at what you're doing, you're going to keep on making progress, and it's going to feel good by the time you get to these certain milestones. So if you like the video, leave a like on it. If you have any comments, if you have any questions, put them down below. Asking me, I'll further explain my thought process behind this if you want me to, but I would never, ever, ever tell you what to do with your money. That's your decision. You got to use what you have. Use the tools, use the data you have available, and you have to make your own decision. If you like these kind of videos, subscribe to my channel. And if you haven't already, leave a like on the video. It shows me I'm making good content and you enjoy what I'm talking about. I will see you in the next video.